Welcome back. You're watching Stock Watch with me, Zinati Guma, and joining me to take your stock-related questions tonight are Ricus Reeders from PSG Hole-in-One Ruimsig and Combrinck from Capicraft. Of course, this episode is pre-recorded on Mondays and Wednesdays. We do pre-record a Stock Watch, so don't be nervous when we don't ask your questions tonight. They will be asked the next day. Simon will be joining you tomorrow, but do please keep on sending your questions to stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag StockWatch. Thank you so much for your time, gentlemen. Pretty interesting moves that we are seeing on the JSE so far this afternoon. Quite interesting, Kumba. It seems that the resources stocks are up. Well, I guess Anglo, Sasol, Kumba Iron Ore. I do see that the gold stocks are down today. Anything to note there, Ricus, on what we're seeing so far there?
I think the main movers there, and you mentioned one of them is Anglo and also Billiton. I think that's on revived rumours. Now, is Billiton going to make a bid for them or not? Because there's nothing underlying in commodities that are boosting the sort of major miners at the moment. So I suspect it's basically just market talk.
All right. And actually, what are you expecting on that, Drikus? Because it has been a long road to get here. Do you think that Anglo is maybe a little bit more open for BHP at this point or not?
Yeah, I do think so. BHP have played down any more corporate action, but I don't believe them. So I do think there might be a move for Anglos. Some of it is already priced in. And I do think it will be better for shareholders if BHP makes a bid, because I think that Anglo management, they're actually selling some assets at rock bottom prices. I mean, the 5% holding that the first couple of Amplats that they sold was at 515 or something. It was the double tick, basically the bottom of the maybe of the platinum market. We'll see. But I do think it would be better for shareholders, also from a time perspective, from a time value of money perspective, if BHP comes in with a bid. I don't think it will be happening this year, though. The year's drawing to a close. But yeah, let's see. But I do believe there's going to be something. And if nothing happens, there will be some value creation from Anglo management sides. They're under pressure to do so.
All right. Gents, also, before we get to the specific questions, one of the big company news out today is the results for Naspers and Prosus. There are also the big movers today on the JSE. Naspers up 3% as we speak. Ricus, everything looks good there. Does this signal more upside for Naspers and Prosus at this point?
Well, I think, first of all, sentiment has changed together with the change in management. Obviously, today's results with core earnings up 74% or something like that helps as well. So I think it's a combination, as I've said, of pretty good results as compared to last year, plus the sentiment towards new management, the behavior of Tencent in China, which is a huge part of their valuation, also helps. So will it continue? Well, they're making promises that it will. Previous management have made similar promises, but I think there's possibly a little bit more confidence in management at the moment.
Drikus, what do you make of the runway for Naspers and Prosus at this point? Do you think that there's maybe very little that could stand in the way of the growth of supportive fundamentals?
Yeah, well, all's about China, that's the one side. So it depends on your view there. But secondly, I do think that for the last 2 years at least, it's been better to access your 10-cent exposure via Naspers because of the share buybacks. They've now bought back about 23% of the shares since, I think, mid-2022. And that's significant. And they're buying back at what I regard as lower valuations than what shares have traded at previous years. So I think there's solid value being created here for shareholders. So if you do want access, and that's the first thing, if you do really want exposure to Tencent, and I won't stand in anybody's way, I think it's cheap at these levels, then I do think Naspers is a good entry. Previously, the one problem with Naspers was basically that a lot of the cash flows that they would be receiving from Tencent, that was reinvested into bad investments, basically. That was what the market was saying, and now at least a large portion of that goes into share buybacks, and there's this mechanism that feeds into more share buybacks if the price falls. So, it looks good, yeah.
All right. Well, Jen, so let's get into the questions. I do understand that the questions today are a little bit more on companies that not a lot of people look at deeply, but we'll try our best. The first question is on Shaftesbury, previous ones at Capital and Counties. View on Shaftesbury. I do believe that they released a trading update, I think last week or 2 weeks ago. Ricus, is this one that that is on your radar?
Yeah, it is to a certain extent. If you talk about Shaftesbury, you're basically talking of the West End in London and property prices in what is a very highly desirable space in London. So it differs from property in the rest of the United Kingdom in that you are dealing here with owners and renters of property with a lot of money. So if it's going well with the wealthy, then it will be going well with the West End, and by default anybody who owns property there, and certainly based on the results, pleasing results when compared to the rest of the UK market. In rand terms, the share price looks pretty positive, and I'm seeing a sort of a target of around about 37 on that. Not so much if you take a look at the pound price, which I think is depressed by the UK property market in general. The UK had its housing price index this morning. Didn't look good. Property shares in general under pressure again today, as they have been for the past 6 months. So even though Shaftesbury is not quite comparable, it's still, unfortunately, is part of a sector that's not in favour at the moment. So for me at the moment, pretty much a hold.
Not in favour, but I mean, could things turn around for the property sector, at least in the near term, Drikus?
Well, the problem is Keir Starmer, the UK Prime Minister, is doing his utter best to destroy the UK. So there's a lot of political risk, in my opinion. I don't see this administration lasting very long. There's a very high chance that it gets booted. But until then, it's hands off for me for the UK. We've got a small exposure here and there because the UK market is cheap, as is a lot of these property counters. The REITs in the UK are some of the cheapest on the planet. So, but your position sizing, just dip your toes in, or your feet at least. Don't go hurtling into the swimming pool just yet until there's a view to another regime in the UK, because it's sentiment, the killing sentiment there at the moment.
Drikus, I want to stick with you because we spoke a little bit before air that Tharisa, there is a panel on Tharisa, and you look at it. Would Tharisa be a buy? I think they released some sort of update last week as well, or a week and a half ago, chrome and PGM producer, and seeming that the PGM side is still facing pressure, but the chrome side actually seems to be the star of the show.
Yeah, it's a highly profitable company, sitting on a 3 price earnings ratio. Problem is most of the cash will be going to a significant PGM project in Zim, or the Karoo project. They're building basically a balance sheet for that one, and it's putting the balance sheet under pressure, and cash flow under pressure for the company. If they were to announce tomorrow that they're walking away from that, for instance, I think the share will double overnight. So the market clearly doesn't believe in the merits of them going through with that project. if they're wrong, and the platinum price recovers just a bit, then, you know, it can double and quadruple from here. So I think this is a deep value stock. If there's really balance sheet problems, they'll just walk away from the Karoo project, and then, you know, still sitting with it, you know, around the 3.5 PE stock. Good operators on the rest of the assets. I think it's deep value.
I mean, just talking about investment into PGMs at this point, Ricus, do you think that that would be a good idea? Maybe in anticipation for an upward cycle at this point, or maybe would you? Yeah, what do you think of the PGM space right now and the miners, considering the pressure that they have gone through?
Yeah, I mean, fundamentally, there's lots of conflicting opinions about the PGM market going forward. You know, and that depends on the uptake of electric vehicles and the corresponding decline in the need for catalysts in the auto industry versus maybe EV sales are not going to be as promising as people think. So there's lots of talk about. I'm ignoring that at the moment and just focusing on prices of those specific companies. At the moment, as far as I'm concerned, they're still going sideways, and your price will foretell what's going to happen with the market. In other words, I'm waiting for that whole sector to start moving out of the sideways movement and start showing a sign of an upturn, and then let the market lead me.
All right. All right, going into more stocks that we don't always talk about on the show. We're going to Brazil now. Drikus, I'm coming to you with this one. Do any of the panelists own Nubank in Brazil?
Yeah, I think it's New Holdings. It's the listing in the US. So it's a fast-growing bank. When I look at a country like Brazil, I don't necessarily look at a growth company. I'm there for the value. So the Brazil Stock Exchange also is very cheap for all the good reasons. You know, it's they've also got a political regime in there at the moment that's not exactly very business friendly, more leaning to the left socialist kind of side of the political spectrum. So market under pressure there, but also don't see them lasting. And even under these circumstances, we prefer to invest in companies that's returning a lot of cash to shareholders, so that if nothing happens, we can still collect a return. And we own Banco do Brazil, which sits on a 3.5 price-earnings ratio.
Yeah. Ricus, would you be looking at a market like Brazil, or do you have any other interesting markets? I know before you've spoken about Poland.
Yeah, well, still positive in that respect, especially with what I think is probably going to be some kind of settlement in the Ukraine with the Trump administration, which will actually be good for Poland in two respects, because it will probably attract increased American spend, at least as far as jacking up the armed forces in the country is concerned. And once America enters a country, they don't leave. Brazil, not so much, not a market I'm concentrating on. I think we are sitting with an emerging market ourselves, and I'm more familiar with what's happening over here. And as politically unstable as Brazil is, so are we, but at least we are, I think, better, or at least I am better informed as to exactly what's happening here, rather than to the day-to-day in Brazil.
All right. Well, let's go to one of the companies that is listed here, and that is Nampak. It's been quite an interesting ride for Nampak. Of course, they released their results today, jumping from a headline loss per share to headline earnings per share. It was quite interesting also because last week they released a trading update that investors didn't really like because it didn't have a lot of color, and then they came out I think a day or 2 days later with more detail, and then you saw cheer there on the stock. Drikus, what do you make of this improvement? Do you think that it is confidence inducing enough?
Yeah, it's a difficult business, but the share price has really had a run this year, you know, especially after after May, July. So had a spectacular run. So how much of the turnaround is being priced in, I'm not sure. But I just want to say one thing on that point of the trading statement. I've seen some awful trading statements the last few years on the JSE. I don't know what the sponsors or the advisors are doing, but geez, some of these trading statements are awful. People, if you're listening, sponsors, designated advisors, bankers, please think it through.
Yeah, I hope they are listening because it was quite chaotic what was happening last week.
Sure.
On your side, Ricus, did you have a chance to look at those numbers? And yeah, did you see something that could potentially make you want to maybe look at the stock for a little longer?
Look, I think let's two things. Let's start with that trading statement. I'm probably rationalising and saying that, well, I think management had their eyes on turning the company around rather than bothering with financial statements. In other words, they had their hands in the business and running it, maybe. But secondly, I think these are very good results. But as Drikus said, they don't operate in a easy environment. So what they have done is quite spectacular in turning the market around. But one should never lose track of the fact that this is still very much a capital-intensive cyclical business. And even if you run it very well, it's going to remain that type of company, and its earnings will oscillate according to whatever the cycle is. And in that sense, it will have good years and it will have awful years. What you hope for is management being consistent in controlling, again, those things they can, which is cost and debt and that kind of thing, which is obviously, on the basis of this results, something that they've done very well.
All right. Well, let's get into financial services and retirement funds and the like. So Alex Forbes released their interim results today. Looking at those numbers, we did see growth. Also, quite a positive reaction from investors as well there. We did have the headline earnings per share from continuing operations up 6%. Drikus, do these results look satisfactory?
Yeah, it's just not bad results. I think I would have expected a little bit better after seeing Sanlam's and Momentum's results earlier, a few months ago at least. The bond market has done very well for these guys, so that normally feeds through to their balance sheet directly. And I thought they might have done better. So it's not my number one pick in the sector. Obviously, they are the target of a potential takeover at the moment. So there's that, and there might be a bid for the company coming, and that's it's quite pricey to the share already. If it doesn't happen, you're still collecting a dandy dividend. So I won't stand in anybody's way that's buying the share here, but it's not my preferred pick in the sector.
Yeah, quite interesting because also they've gone through quite a lot of or strategic kind of plan there. Ricus, would you say that they've gotten to a place where they are in a solid footing, where they do look very much attractive to other companies?
Yes, even, they started this process, 2-3 years ago, maybe even more. And it's been something, it's been a company, I think, that's been off the radar, certainly for me, and I think for a lot of investors. And they've been having a price-wise, share price-wise, a steady, no drama uptick in share price plus a nice dividend yield. So they move into distribution and asset management rather than just asset administration seems to be doing well. And taking a look at their forward statements, they expect that to continue. So even if there's not a takeover bid on the company, I think it's a changed animal in the sense of the services that they provide, with a lot of growth possibilities going forward and a lot of experience in the business itself. So Yeah, I'm starting to think it's quite interesting.
Yeah. Well, talking about a changed animal, Transaction Capital certainly is one. They did have an update today on a disposal that they are embarking on. And of course, we know that they are changing their name to Newton. Yo, I think just under 3 Rand. Drikus, what do you think of Transaction Capital and basically what it looks like right now? And yeah, just the future prospects of it.
No, I've stopped following post-down bundling, so I'm not sure what the real value is here. So I'm going to skip this one.
Yeah. Ricus, on your side?
No, I've got no interest in the company.
All right.
Really no commentary.
But would your focus be on we buy cars, Drikus?
Yeah, I've followed WeBuyCars. I haven't bought in. We own a bit of CMH, and if you follow the commentary, you really see the likes of Wheelie and WeBuyCars really giving the guys a headache. If you speak to any second-hand car dealership, they'll complain about the presence of WeBuyCars and how they get undercut, and how the WeBuyCars and Wheelie algorithms really is good intellectual property. So I think that's something you get with the company that you're not getting with, say, for instance, a Motors or CMH. But everything has its price, and I'm not sure the risks are adequately priced in. We've got a lot of Chinese cars coming into SA. I'm not sure how long those will take before they end up on the second-hand showrooms, but a lot of these Chinese cars are being sold directly to the consumer. The Chinese car makers do tend to have some of their own dealerships, etc. Yes, I'm not sure how the car market is going to play out. I do think the likes of CMH are cheaper, and I do rate the management, so I'm there.
All right. You, Ricus, on We Buy Cars, considering also how hard it's run?
Also in the sidelines at the moment. New vehicle sales in South Africa is coming out in about 20 minutes. It's going to be interesting to see what the trends are there. But yeah, it's probably just my investment style, but I like to see something listed for a while before I get, shall we say, a feel for it and what the business operates like as a almost new entity.
All right. Well, gents, let us get to your stock picks for today. Drikus, what are you hanging your hat on today?
Okay, Paramount shares. That's the B shares. It's the only one listed. It's on the Nasdaq. It's trading just below $11. You'll get by mid 2025. You'll get $15 a share for it. It's being bought out by Skydance Entertainment, and yeah, they're offering $15 a share. They won't buy everything. That's why it's trading at such a discount. It's still too wide of a discount. The whole industry is under pressure. A lot of them are extremely cheap, but this one so much more so. So if the takeover fails from Skydance, and they're injecting $1.5 billion of cash into the balance sheet, by the way, that's part of the problem for Paramount, is the balance sheet. They sit with $12 billion of debt that they will struggle to roll over in coming years. But apart from the debt, operating-wise, it's doing much better. The company is actually releasing a lot of good content relative to what is actually mostly unwatchable stuff these days. Maybe it's just my age, but I regard most of the stuff that we're receiving here as unwatchable. But so they're releasing actually stuff that's much better content-wise, and that's doing quite well. It's lucrative for them. Think of something like Yellowstone. That's theirs. The new Landman will do well, etc. And they're also going directly to consumer. The direct-to-consumer streaming business is doing quite well and is growing at double digits at the moment. So turnaround story, trading at a 6.5 PE, being bought out, you'll receive a bit of cash back, and the rest of it is going into a new entity, and I think the story continues there.
Yeah, all right. Ricus, so what do you have your eyes on today?
Well, I've had before, it's Home Depot, and it's a bit future music at the moment. The results were out a few days ago, which was pleasing, but not spectacular, because their main business, which is supplying the do-it-yourself home improvement market, think something like Cashbuild, that's still in the doldrums as the American housing market is in stasis. There's not enough property coming onto the market, and there's not enough money around in people's pockets to afford a home. Once that market starts moving again, you'll see people starting to do home improvement again. That's their main business. What interests me more is the acquisitions they've done over the past few months or years, where they're moving more and more into supplying professional builders. They've just concluded the biggest deal in their life, or in the company's life, a few days ago, also with a supplier of building products to professional builders. This achieves two things. It gives them another avenue of growth, and it also softens the cyclical nature of their market a little bit, because a professional builder will tend to come back and buy whether the market is up or down. So I'm always looking for new growth vectors in established companies, and I think Home Depot is doing that.
All right. Well, thank you so much for your time and for your analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guests, Ricus Reeders from PSG Hole-in-One Ruimsig and Drikus Combrinck from Capicraft. Up next, The Close. Stay tuned.